Hey class, how you doing? We're back with part 2 of this video, and I will keep it brief. I just want to have I had a few closing remarks I didn't have enough time for in the last video to kind of squeeze in. Keep in mind, this is all estimates and projections based on what you reasonably think your business could do within the first 12 months. And so I'm not going to say there's no wrong or right, because there's definitely a wrong. If it's just really, really weak in its presentation and not well thought out, then that's obviously not going to be right. But if you've shown that you put some thought into it and or trying to use some type of systematic approach to how you project sales, how you project purchases and paid outs, then that's a good approach. The idea behind this exercise is to get you thinking and to expose you to this. There's nothing like the real world to train you on how to manage, cash flow and manage money when it comes to a business. And you'll never know that until you get out into the real world and do some type of business management. But from an academic standpoint, in lieu of the real world exposure, we have to try to force you down this, tunnel to get you thinking in terms of the different aspects of what's involved in cash flow from a business management perspective. Some of these metrics on the far left, like, you might not use any of these. For example, you may not need an accounting or legal person immediately. I would say definitely would prefer the accounting over the legal, but that may not be something that you might need right out of the gate. But when it comes to taxes and things that you may not be aware of, insurance and things like this, you have to do a little bit of research and see, what you think your estimated insurance is going to be, or your estimated utilities. So, you have to make some educated estimates on this. And then when you get down to it, it will total up your paid outs and weigh those against your cash receipts and start to give you some finality to your numbers. Once again, if you get down to the brass tacks and your final total cash available for the year is in the negative, that's not unrealistic. That's probably more realistic than you having $1 million profit your first year. Very, very, very few businesses do that. Just to have that breakout success where they turn basically straight into profit from day one. I would say that 1 or 2% maybe go into the stratosphere right out of the gate. Most businesses either fail or either have a low profit or a no profit for the first year. So keep that in mind. It'll subtotal it out for you, and then there's a final column at the bottom, or final rows that you will want to look at, and you may or may not want to use any of these. So if it's loan principal payments, like if you're going to make additional payments on any loans you might have, capital purchase, other startup costs, reserve and or escrow, owner's withdrawal. This is the one that I just wanted to take a moment to speak on. It really depends. Like, I had an idea where I may want to start a small business myself in the future, and as it were, just through my previous experience, I thought about, I've seen small businesses thrive when owner payout was little to nothing, and that allowed for the business to have enough money to endure for the first few years to kind of learn the ropes, and then that allowed for more savings into the business, that they had cash to purchase other supplies and other things they needed to make the business thrive. So as an example, let's say you used to have a small business that had $50,000 on hand. At the end of the year one, let's say that you actually, after you paid all the bills, you actually turned like a $120,000 profit. Well, as the owner, you can take that 120, either having paid it out in like $10,000 increments over 12 months to yourself, or you could just leave that 120, let it ride, and instead of having $50,000 in the bank, you now have $170,000. You do that for a couple years, and you end up with about $250,000, somewhere in there, depending on how long you let it go. And when you've got $250,000 to $500,000, depending on the industry, you've got some buying power. So you can buy additional inventory and really start to scale your business upwards. And so those are things that you want to consider. My advice, depending on the industry, depending on the product, would be to consider keeping as much cash on hand as possible into the business and avoid paying yourself out if at all possible. But if you do decide to take some payouts, like I say that you put your whole life on the line for this thing, you quit all your other employment, and you need some minimum payouts to make sure that you have some type of standard of living, then you want to account for that. Let's say that you need $2,000 or $3,000 a month to live, so you want to account for that here and keep that there. And then at the very bottom of this sheet, there's an additional information for non-cash flow. You don't even need to fill that out. So, all right. So I hope you've got a sense of what I'm looking for. Keep in mind, once again, these are estimates, and you want to think of them as such. But you do want to spend some time working on this and play with the numbers and see how one thing affects other things. And for example, it's tempting early on to spend a ton of money on marketing, but marketing is one of those never-ending black holes that you can just dump tons of cash into. And if you don't know what you're doing, you can spend all this cash into marketing and not understand if you're seeing a return on that investment or not. And so keep that kind of stuff in mind. Advertising. I was looking for the term marketing. So when you look at that advertising, you want to be careful in how much money you're spending and know what you're spending that on. So spend some time going through this. When it comes to providing me information on this, what I would recommend is take a screenshot, and then you're probably going to have to do this in 2 or 3 screenshots. So take a screenshot and give me the top half or the top portion when you have your cash receipts, and then I would take another screenshot with the cash paid out section. And then if you want to include underneath the subtotal, that last section with those additional paid outs, you probably have to, because it's going to give a final number below. Let's see if I can identify that. Yeah, right there you can see those bottom numbers. So that cash position end of the month, that's probably what I'm going to want to see in a PowerPoint presentation. So it might take, I'm going to say 3 slides. And if you need some additional slides to explain some things as to your cash flow, like your justification for certain expenses, please by all means do that. Don't just throw these numbers up here. If you feel like you need to explain something, you can do it very briefly on the PowerPoint and bring awareness to something and clarity to something. So don't hesitate to do that, okay? If you need me, don't hesitate to reach out to me. You know how to reach me through email. And so I'm going to provide this along with the videos that you've watched and a assignment link to turn it in. And if anything that you need throughout this process, just let me know, okay? All right, guys. Well, I hope you've enjoyed this presentation, and I look forward to your submissions, and have a great rest of your week. One quick note, I will be providing another video to the entire group of classes with some additional information, so you might want to check that out. All right, guys. Have a good one.